Is the crypto market about to explode, or is it a trap? Big US banks are finally jumping in, which could kickstart huge adoption. At the same time, we just saw a massive liquidation event that shook out overly eager traders, and some experts are saying it's already time to think about taking profits, not just buying more. It's a confusing time with a lot of mixed signals. We're looking at what's really driving the market right now, from institutional money and new tech to big news for XRP. Is this the start of the real altcoin season, or is a bigger drop on the way? In a latest video from Altcoin Daily, the discussion centers on a major shift happening in crypto, even as prices seem to be moving sideways. The big news is that major US banks are finally stepping into the crypto world, largely thanks to new regulations around stablecoins. KeyBank, a top 30 bank with an asset value of $185 billion, is set to offer Bitcoin trading and custody to its 3.5 million customers. This follows the passing of a stablecoin bill, which provided the regulatory clarity these institutions needed. The video calls this bill a Trojan horse for wider crypto adoption. It's interesting to watch the narrative presented in the video line up with real-world financial news. The announcements from KeyBank and PNC aren't just isolated events. They're part of a much larger trend of traditional finance integrating with digital assets. This move seems less about a sudden belief in crypto's founding ideals and more about a calculated business decision. Banks see the massive flow of capital into crypto and realize they're losing out. By offering custody and trading, they can capture a piece of that market and keep their customers within their own ecosystem. The recent progress on stablecoin legislation in the US was clearly the final piece of the puzzle they were waiting for to manage their risk. This whole process shows crypto is maturing, shifting from a niche interest into a recognized asset class that big financial players can no longer ignore. In the latest video from Crypto Rover, the channel gives a full tour of WEX, a crypto exchange that's making its mark in the no ID required space. The presenter explains that on WEX, you can trade from any country without needing a passport or ID. He mentions the platform's impressive numbers: 935 available coins, over 700 futures pairs, and an average daily trading volume of almost $9 billion. WEX also reportedly has a 1,000 Bitcoin protection fund valued at over $95 million, which users can verify on-chain. It's interesting to see another exchange like WEX enter the non-KYC field, which always attracts a specific type of trader looking for privacy. The promotion is quite aggressive, with a $100 no deposit bonus being a strong hook to get new users on board. While the video presents WEX's features, like its large selection of coins and copy trading, the real discussion point is the non-KYC model itself. These platforms operate in a regulatory gray area, and their long-term stability can be a question mark compared to exchanges that comply with stricter regulations. The high leverage 400x is a classic marketing tool in this space. It grabs attention, but as the host rightly points out, is incredibly risky. The strong push for an affiliate link is standard practice for influencers, but it's always a good reminder that these are sponsored presentations. In the latest video from the Crypto Tips channel, the host explains a common and costly mistake in the crypto world, thinking a blockchain is just a decentralized database. It's not. A traditional database is built for speed and flexibility, letting a central party read, write, and delete data easily. A blockchain, however, is a consensus machine built for establishing unchangeable truth. Its slowness and high cost aren't bugs. They're features that ensure security and agreement across thousands of machines that don't trust each other. I think this video gets to the heart of a debate that's defining the next phase of crypto. The whole monolithic versus modular discussion is exactly what the host is talking about. For a long time, the goal was to build a single blockchain that did everything perfectly. Now, the industry is realizing that's not practical. The rise of projects like Celestia, which focuses only on data availability, shows a clear shift towards the modular Lego block approach mentioned. It's a more realistic way to build, allowing developers to combine specialized layers for execution, settlement, and data. We're also seeing the decentralization theater play out in real time with many Layer 2 solutions. While they offer much-needed scalability for Ethereum, many still rely on centralized sequencers to order transactions, which is a major security trade-off. It seems the market is currently willing to accept these trade-offs for better performance, but the long-term goal for these projects has to be full decentralization to stay true to crypto's core values. In the latest video from the Lark Davis channel, he asks if we're finally entering the banana zone, that wild part of the bull market where altcoins go crazy. He reminds everyone that the main goal is to make money and get out, not to become a genius in a bull market. He points to a chart from CryptoRand that suggests Bitcoin could be consolidating before it moves toward $120,000, with a potential local top around $155,000 and an ultimate peak near $250,000. He also references a projection from VanEck's Matthew Sigel, which sees a possible $10 trillion total crypto market cap. The video shows that the altcoin market cap, excluding Bitcoin and Ethereum, is right at its previous all-time highs, ready for a potential takeoff. The Total 2 chart, which includes all coins except Bitcoin, is showing a pattern very similar to what happened in 2017 and 2021, just before the market went wild. According to indicators from CoinGlass, we're not seeing any major top signals yet. He stresses that we're still far from the real mania phase, which is marked by non-stop hype, and eventually a point where good news no longer moves prices up. The core message is to shift your mindset from buying to selling as prices climb. Protecting your profits becomes more important than chasing further gains, especially as retail investors pour in. It's interesting to see this analysis as it captures the hopeful yet cautious feeling in the market right now. In my view, Lark's focus on capital preservation is extremely timely. While many charts point to a very bullish future, the market has been trading sideways for a bit, and a lot of the initial excitement from the Bitcoin ETFs has been absorbed. We haven't seen that explosive, broad-based altcoin run just yet, and some coins have actually pulled back significantly from their recent highs. This current market condition makes his advice about not getting too greedy feel particularly relevant. The idea of a parabolic run is always exciting, but the reality often involves sharp corrections and periods of doubt, which we're seeing now. His perspective serves as a good reminder that managing risk is just as important as picking winners. In the latest video from Crypto's Russ, the host breaks down why the crypto market took a hit. He points to two main factors. The biggest reason was a classic market shakeout. There were simply too many people going long on crypto, and market makers stepped in to clear out that leverage, causing over $600 million in liquidations, according to CoinGlass. He stresses that this kind of pullback is normal after a week where many altcoins saw huge gains of 20 to 40%. The second, less impactful reason was news about the SEC. They recently approved a Bitwise crypto index ETF, but then quickly halted its launch. The holdup is specifically because XRP is part of the index, and the SEC is still sorting things out with Ripple. While this spooked some, the host believes the leverage flush was the real driver of the dip. He also touches on Jim Cramer, who is now telling everyone to buy Bitcoin because he's worried about the U.S.'s $38 trillion national debt. Cramer sees it as the best protection against inflation. The video ends on a positive note, mentioning that Bitcoin has already bounced back from its dip and that we could be in the early stages of an altcoin season. It's my view that the analysis in the video is spot on, especially about the leverage flush. This has become a recurring theme in the current market cycle. Whenever speculation gets too hot and too many traders bet on prices going up, a sharp, sudden drop to liquidate those positions often follows. It's a classic reset. The point about Jim Cramer is interesting because the crypto community has a long-running joke that his calls are a reliable contrarian indicator. So, while his reasoning about the national debt makes sense, his newfound bullishness is met with a bit of humorous suspicion by longtime crypto watchers. The SEC's delay of the Bitwise ETF over XRP also shows just how tricky the regulatory path is. Even as we see progress with Bitcoin and Ethereum ETFs, the status of other altcoins remains a messy affair that can easily complicate things. In the latest video from Crypto Wendy, she talks about XRP's big moves in the market. It has officially become the 91st largest asset in the world, climbing past giants like PepsiCo, Uber, and even BlackRock with a market cap of $24 billion. It's now getting very close to overtaking McDonald's. A big piece of news is that a vertical farming tech company, Nature's Miracle, is adding 20 million XRP to its corporate treasury for long-term reserves and staking. This shows growing corporate trust in the asset. On top of that, XRP futures trading is heating up, with CME Active Trader reporting its biggest trading day ever, hitting a notional volume of $3.1 billion. The video also touches on Ripple's work in Brazil, where a company named Vert has launched a platform on an XRPL sidechain to manage structured credit, starting with a BRL 700 million issuance. All these developments point to a solid foundation being built for Ripple's ecosystem, even when the broader market is a bit shaky. It's interesting to see the focus on XRP's market cap growth and real-world adoption, like the moves in Brazil. The corporate treasury news with Nature's Miracle is a solid vote of confidence. However, it's hard to talk about XRP's future without considering the massive elephant in the room, the ongoing legal battle with the SEC in the United States. While the developments abroad are impressive and show the technology's utility, the outcome of that lawsuit will likely have a much larger impact on its price and its ability to secure a spot ETF in the US. The market seems to be in a holding pattern, waiting for a final judgment, which continues to be the main story for XRP.